Hey, it's Eric with Jazz Wealth Managers. Wow, I think that we have the recession looming. Everybody is freaking out, and it's a big question that a lot of people are asking. It's, how do I invest in a recession? Or do I invest? Or do I go all to cash? Well, we've always talked about the last time that you want to go to cash is when the market continues to fall, because all you're going to do is take the cash, set aside your losses, and then now when's the rebound going to happen? You could potentially miss out on a big opportunity. So what you've got to look at here is a little bit of data. We'll get a little geeky. I'm going to show you some charts. Some of this is something that if you watch Wine and Wealth, our clients get that every Thursday night. If you watched Wine and Wealth here recently, Dustin just went through this. He also made it public. So if you happen to watch it, he went into a lot more detail. But what I want to show you here is a bit about the recessions in the markets. So if we're looking at this chart specifically, what you see right here is a gray line. The gray line is where the recession starts, and where the recession is announced specifically is that red dot. Now, the bottoms are announced then, if you're looking there at the bottom, announced at the blue dot. So what does this mean? Well, looking at this chart, it is showing you right this second, looking at different opportunities throughout history, that yes, the recession's announced and the bottom is announced. Look here, this one looks to be a bit different if you're watching where my mouse cursor is there. It's a bit lower. But then at other times, where's the bottom announced? Well, the bottom is going to be announced way after the recession. So check right here. So the recession is announced here in 2008. The bottom is announced over here where the blue is. So it's interesting to see the different variables on where to invest during a recession. So exactly what does this chart mean? And that's what I want to show you right here. Well, if you take the chart and you actually break it down to the nitty-gritty, what we're talking about with this chart is the only time in history where the recession wasn't already 2/3 over by the time it was declared was the second dip in the early 80s when the 81-82 recession was declared 40% of the way through. So that being said, what you got to look at, I'm going to go through a little bit more on the charts with you, but that means that if a recession is announced every other time in history except for once, we were already 2/3 of the way to the bottom. So let's take a look at exactly what that means right here and why it really is something to focus on when it comes to investing. So in the 80s right here, in the early 80s, if you're looking at the left chart, we've got the recession announced. As you can see, the market continued to go up after that, even after they announced the recession. The reason is oftentimes the markets are looking early into what is already ahead. So the markets think ahead a bit on what's happening in the overall economy. They're pricing it in early. So if we're looking right here in 1982, this is where it actually continued to fall. Another bit, it was not quite 2/3 of the way fallen from when they announced the recession. Now jumping over here to the 90s and 2001, again, we see once they announced the recession, this one in the early 90s didn't really go down too much farther. And then in 01, it did have a drop still, but again, this chart is misleading because what you're not seeing is everything that fell before when it came to this chart. And the idea here is that it was actually still 2/3 of the way down. Got one more for you. If we're looking here at 2008, again, the recession was announced. It had already fallen over 2/3 of the way. And then in 2020, as we all remember far too well, that's one where the market fell and quickly rebounded back. They announced a recession, but the market had already rebounded completely. That was one I remember when clients were calling and they were asking. They said, well, when should I get in? When should I get in? And that's what we've got to talk about. When is the best time to invest in a recession? Well, according to the data that I'm showing you right here, nobody knows exactly where the bottom is, but the majority of the time, except for once in history, when they announce a recession, the market has already fallen more than 2/3 of the way down. So there's a good possibility that we could start to see a rebound once they announce a recession in the short term. So the better opportunity is to get in right around the time they're announcing that recession. So it's something to think about. It's a little bit of food for thought when it comes to everything, because there's a lot of charts we can go through. We like to do that and talk the geeky stuff. But in the end, we got to base it on history. Nobody knows exactly what could happen, but we definitely think that when it comes to the markets, we definitely are able to predict based on history because we often see that. So if you would, let me know what you think about it in the comments with that. Thanks for watching. If you want to watch more FinTips videos, click here. Be sure to like and subscribe also.